How's it going, guys? Welcome to Capital Games 500, and in today's video we're going to be looking at what the future holds for the stock market in correlation to what has been going on in the United States. As you guys know, the National Guard has been called upon many states and cities to calm down all the riots, the looting, and keep peace within protests. On behalf of the protesters, it is great that they are standing up for what they believe. On behalf of the looters and the rioters, those are the people that are going to cause so much more damage than what they are physically causing on the streets. You know, they're mainly attacking small businesses. Of course, they're going to go for the large businesses like Target, Walmart. I saw live on television in California. They were looting a Hot Topic and other small franchises. But you see, the people that they are affecting most aren't the big retailers. Those people, the corporations have insurances, they're covered, you know, they're well protected. But a lot of this burden is going to come down to the small owners, the small franchisees who are taking on debt to establish their business. They're going to get crushed. In this video, I want to give my thoughts on where I think the stock market's going to go, how the stock market's going to react, and what can be the aftermath of this. Here's a quick article from the Wall Street Journal, really covering what has been going on, what cities are getting the most attacked and vandalized and hurt by this. Like I said, it's not the protesters, it's all these other people who are taking advantage. But as traders, as investors, we must realize that this could have an effect moving on, and will have an effect moving on. Now our job is to predict where it will benefit and who will get crushed. I hope that small business owners that are having losses are able to recover. And for that reason, what I believe might first come is that more stimulus money will come to small businesses. More money will come into the Wall Street area. I believe the Fed is going to start. They have already, as you guys know, been printing up money, but they're just going to print even more money. But instead of how they've been trying to give it to Main Street, to people as stimulus checks, I really think they are going to be sway to not give it to people and instead give it more directly to business owners, which could in theory continue to prop up the stock market, continue to inflate stocks. So we have to see which ones are of best value so that we can also go in and put our money in and join the tides that are going to be going up. As you guys know, that it's mainly brick and mortars that are getting attacked and vandalized and harassed, and brick and mortars have already been struggling as it is. Not necessarily Target, Walmart, those giants, you know, like I said, they're pretty well established. In my opinion, too big to fail. More than anything, they might even continue to expand. As you know, they're expanding on e-commerce. So that's where we are going to see more money flow into. I believe that these big players their stock market is gonna go up instead of down. And why is that? Because usually the dinosaurs, the old companies ran by an older generation, they tend to be slower and adapting. But I think this is a wake-up call to them to let them know that, oh my gosh, you know, first of all, we've already been struggling, our sales are declining, people are not shopping at our stores directly, they're going to Amazon. So who's our biggest competitor? It's Amazon. And what's their biggest advantage? It's online e-commerce. So Target, Walmart, Best Buy, they're all switching and pushing forward heavily towards e-commerce. Once they are more established and take back more market shares from Amazon, their stocks might start to rise. I wouldn't be surprised to see Target at 150, 200 once they have a really good supply chain establishment in the e-commerce space, making it easier for consumers to buy, shop, get shipped, returns. You know, it's all about convenience to the customer. That's what Jeff Bezos has been all about, and that's why Amazon is the king right now. But moving forward, this looting and rioting is going to give once again a wake-up call to Target, Walmart, and other brick and mortars, to the small mom and pop businesses. They're going to struggle. And as entrepreneurs, you know, our job is, I'm an entrepreneur too. I have other businesses. I have a small business, and I've been doing some e-commerce online myself, so I believe for that reason they're going to need more infrastructure. And some of the big players already in the e-com space is obviously, like, you know, Shopify. We're going to start seeing more people just like ditch ditch even the idea of opening up a brick and mortar. You know, this is gonna change views in the future. Like, oh, should I open up a store? No, I should just open up a e-commerce. I don't want to get vandalized. I don't want to. You know, you can start an e-commerce from the comfort of your home and grow. In my prediction, I wouldn't be surprised to see Shopify hit the $1,000 mark per share. It's currently at 720. It's been a beast these past couple of 5 years. In 2017, that's when I learned about Shopify and e-commerce, and I was trying to do my little drop shipping store e-commerce website. What I should have been doing was buying Shopify stock instead of failing to do e-commerce, because the stock has done phenomenal, amazing. Honestly, look, 2017. If I would have bought it for $100, even that, a couple days before, in the early 2017, $40-50, raising by the end of 2017, we're looking at the price tag of 105, and even then it was still a steal deal compared to the 700 price tag right now. As you know, it's been shooting up like a bottle rocket in the last couple of months, and this is just going to push it even more. What's going on, people are going to be there, you know, brick and mortars come with a lot of expenses, and just to get them vandalized and all this, like, it's, again, I feel like it's going to get people scared, and it's going to make small business owners just switch to online, close their shop, and just open up a website, e-commerce, like I said. So anything in the tech space and the software SaaS companies, I really do think those are others to consider besides besides investing in big players already, like even Amazon stock. I wouldn't be surprised it continues to dominate. More people are not going to go out because they're going to be scared, or more brick and mortars, small mom and pop shops are going to close, and now Amazon's going to get bigger. People are just going to default to shopping on Amazon. Walmart, Target, the big players, small startups are going to go on Shopify. Alibaba is another great contender. You know, for a lot of people, you can literally go on YouTube and learn how to drop ship, how to buy inventory now from China, and one of the best suppliers and easy to use websites now is Alibaba. Alibaba is going to continue to grow. It's been having a couple of rough weeks, beat down, and it's always in the middle of tension between the US and China because it is a Chinese company. But for the price of $205 as a long hold, I do see this going up. Also, again, e-commerce space, that's a contender right here. For small startups, Salesforce, PayPal, anything with a transaction, you know, more payments are going to go digital with these platforms. They're going to be used. PayPal is another great company with the integration of Shopify. Zoom is another company that has been going up and up, as you guys know, lately. And with this, more people are not going to want to go out due to the beer bug. Who knows if we're going to start spiking up with another wave, and so we're going to have to be at home stuck again. And then what's one of the stock was that has already proved itself to boom was Zoom. I believe if we see a second wave of, you know, infections because of all these large group gatherings, for that reason, I wouldn't be surprised to see Zoom almost at what the 182 mark, and continue to fix their infrastructure as long as they continue to update their security and enroll users and give more benefits to its users. Their price, I wouldn't be surprised to see them at 200. Again, there's so much that is going to change and shift. I believe also financial companies, insurance companies are going to take somewhat of a hit for the time being, only because if they are going to have to start paying coverages, or they might even go, it actually could go both ways now looking at it, because, you know, more companies, more small businesses will be on alert and just go and get insurance, or when they have to pay out in their earnings call, maybe we'll see a dip. So I'd stay away from insurance companies. I don't know much about them. I don't know about the business. So I'm just pointing that out there because I have seen in groups and in chats between people that insurance companies are going to go down. So just my 2 cents. I don't know where they're going to go. I personally am staying away. If I don't know it, I'm not going to invest blindly. I don't want to risk any money. You know, my capital is limited, and I just want to put it to work in the best possible scenario where I believe is truly going to grow. Like I said, e-commerce, remote, that's where those type of stocks, that's where I believe would be the ones to take home the prize for what's all going on, in fears of people want to put their money somewhere safe. Obviously, the top ones would be like the secured ones like Amazon, the FANG stocks, but a little bit more riskier are e-commerce. I actually don't even see Walmart as a risk that as a risk investment. It's a really good long and hold as it is, but I do see it going up faster as long as they keep continuing and expanding in the e-commerce space. Target too. Those are my 2 cents for today's video and what I think is gonna happen moving on from these protests and in the aftermath. Leave your comments down below. Let me know if you like this video. What you think. What are you planning to invest on? You know, let's talk. Let's open the conversation. That way we can all learn from each other and, you know, find a path where we can all grow and get some gains. If you're new to the channel, subscribe. This is Capital Gains 500. My purpose on this channel is to really bring you some news and some predictions on where I think the stock markets are going and how to maneuver around tough times, right? Especially like right now. So you definitely want to subscribe to be up to date, to be informed. That way you are a little bit better, a little bit more educated, and you know we can all get them gains. So have a good day. Stay safe and best of luck to all of you. Thank you and goodbye.